Hello, this is Edmund Shing, Global Equity Fund Manager at BCS Asset Management. Today we present our weekly global strategy presentation looking at financial market indicators. Let's start with the macro. The top chart on the right here, the blue line, shows that the lead economic indicator for the US continues to improve. The bottom chart down here, the blue line being US manufacturing, the green line being Eurozone manufacturing, again shows continued improvement in trend. So on the macro side, looks pretty positive. In terms of stock market trends now, focus on the bottom graph on the black line. This is the average US stock. As you can see, it continues to break new highs, which again is a positive from the point of view of momentum. We see a solid uptrend in the average stock, and that supports further gains in stock markets. Here we look at investor sentiment. This is the only negative that we really see in the short term. This bottom chart looks at the difference between bulls and bears, and you can see that bulls are very much in control. You see a record high in terms of investor sentiment, which for me is worrying because it suggests there could be a short-term pullback in stock markets because people are already so optimistic. Looking at fund flows, just looking here at the top chart on the right, you can see in green there have been consistent selling of bond funds in the last 5 months, and here at the top, pretty consistent buying of stock funds instead. So again, that is pretty good, but note here how much selling of equity funds there was over the previous 2 years and how much buying of bond funds. So this, what we see in the last few months, is only a partial reversal of the old trend, and I think it could go further still. So this is a positive for stocks. Let's focus on risk, looking at the bottom chart, which is the Citi Macro Risk Index. Again, pretty low versus history, suggesting low risk at the moment, so a positive for stocks and high yield bonds. And if we look at the bond market, we can see here that bond spreads, in terms of corporate bond spreads, are trending lower. So this is good news for high yield bonds. And again, financial stress, according to the St. Louis Fed in the United States, remains near historic lows. So pretty positive for high yield bonds. And finally, looking at monthly seasonal trends, we can see that December is actually a very good month historically for stock market returns. In fact, if you look at the top chart, you can see that there has been a 91% chance of the stock market gaining in the month of December in the US. If we look to the table below, we can see that of all the 12 months, December has on average been the best performing month for the stock market since 1970. So to sum up, all of our indicators, momentum, macro, risk, are positive for risk assets such as stock markets and high yield bonds. However, sentiment, investor sentiment, maybe has gone too far, too quickly, and may suggest a short-term setback. But to me, this would be a buying opportunity for stock markets. This is me, Edmund Shing at BCS Asset Management, saying thank you for watching, and until next time.